Morning all, how are you all doing? Happy non-farm payroll day. This is Friday again, non-farm payroll day. Morning ladder, morning diamond. Hey, you know what we were talking about yesterday with our YouTube videos and our adverts, the people that keep advertising to us all the time? Guess who I got this morning on the live room? It wasn't Mr. Greg Secker, unfortunately. We did try and find him yesterday, but I did get Nirav. He came up this morning. Good old Nirav. Anyway, so today is non-farm payroll day. We've got Canadian unemployment released alongside non-farm. So this morning will be very hit and miss. It's either a nutty day and we get loads of movement, or it goes flat. A little bit like we did yesterday. We had a really flat session yesterday. It's horrible, sideways, choppy. Until we got the Bank of England rate announcement, obviously, which came out at 3%. And then a load of dovish comments from Bailey about how bad it's going to be and how everyone's going to be poor and we're all going to have to start buying guns and killing each other because we won't afford to be able to feed ourselves and, you know, Walking Dead stuff. But anyway, on the brighter side, pound came down quite hard. So yeah, non-farm payroll at 12:30. Obviously, it's a big mover, non-farm, most of the time, but not necessarily directional. So we will see what happens. You can never tell what's going to happen with non-farm payroll. Average weekly range on the pound CAD has been exceeded. Looks like the pound CAD has gone a little bit more downside today. So yeah, selling off again this morning, the pound. What's the risk on 200? So yeah, probably more weakness on pound today, I suspect, but we will see. We obviously had a big sell-off on the pound yesterday. Everything absolutely tanked, as you would expect. ADRs across the board. We only got to 150, 175 ADR though yesterday. Wasn't absolutely huge moves, but yeah. Diamond, I get that guy all the time. I just mute him and skip as soon as I can. He's too cheap to pay for the non-skippable ads. Yeah. Morning, Themba. Yeah, so big drop on the pound in the grand scheme of things, obviously. I'm expecting the pound to keep coming down, so I'm looking for an opportunity to get in short on it. I'd like a little bit of a pullback. I'm not potentially worried about getting an extension on RSI on it at the moment, but I'd like some kind of pullback. I can't jump on when it's tanking this fast. It's really hard to hit the sell button when something is so extended. Some kind of pullback on the pound. I'll start looking for shorts. I mean, pound US dollar this morning has pulled back. If you look at that on the 4-hour, very nice tweezer top rejection. But you've got to ask yourself, are we going to come and test this propulsion gap? At least come and test the lows of the propulsion gap, if not somewhere in between, which would be ADR. So any ADR hits, if we get anything like that, or any RSI extensions to the upside on the hourlies, I should be looking to get in anything pound related as a short. You could also, if you want to be really aggressive on it, and I don't see any reason not to be particularly aggressive on these pounds as a short at the moment. You could get in on RSI extensions on the 15-minute. Not necessarily, I probably wouldn't go 14. So yeah, I mean, it's just, there's a lot of, the moves were so fast yesterday after the rates were announced. I got out my pound way too quick, but yeah. Any kind of shorts on these, opportunities for pound shorts all over the place. Just got to get on board. I've just taken a DAX short this morning. Got a lovely big gap this morning. And from a daily perspective yesterday, we had another down day and a little bit of a rejection at the lows. So I suspect we will possibly try and continue the downward move this morning. The fact that we've gapped up as well this morning after such a bearish move. We had bearish move yesterday and a bit of profit taking, but we still ended bearish, gapped up, looking for potentially a gap fill, maybe go sideways after the gap fill this morning, but we'll see what happens. So I'm taking some risk on this morning, on trying to get this, but I've got stops above the highs. If it flies off to the highs, then I'll take a loss on it. Didn't manage to bank anything yesterday. I didn't actually trade this account yesterday, to be honest, because there's so much going on with the news at the minute. I'm really focusing on my scalping at the moment on the prop accounts. I've got the prop accounts all up to where I want them to be for a withdrawal. I've just got to wait for the withdrawal. And obviously I started the new EA account yesterday. So I've just been focusing on that, really. That's going to pay me this month. There's so much volatility and so much news going on at the minute. I just wanted to get this week out of the way. Volatility is obviously great. From a position trading perspective, it's very hard to take any positions on when you've got so much potential unknown manipulation ahead of you. But from a scalping perspective, obviously there's an awful lot of opportunities on very short term, which is what I've been doing. Next week, however, obviously everything is back to normal. We're all kind of calmed down. We've got CPI for the US next week, but apart from that, there's hardly anything coming out. GDP is irrelevant. GDP is although it is red news and it does potentially move the market if it's a big shock, but GDP is a result of monetary policy. We haven't got our monetary policy coming in until the 17th of November in the UK. So the GDP figures are irrelevant because what that is has got nothing to do with what's going to happen the week after from a monetary policy perspective from the Chancellor. So next week's really light week for news. So hopefully we'll be able to get some positions on. Morning, Stevie. Morning, Tammy. So just very light still on the exposure at the moment. The only thing I've got on is the Aussie New Zealand, which is pushing nicely today. So far, we had a decent start of a push yesterday and a rejection down. Today has started the same way. So if we can get a bull day in, I mean, we're what 1, 2, 3, 4, 6 days down now. We are due our pullback for a profit take. The market needs to take profit on this move. I'm 175 ADR average now, so it's a big ask for it to hit today, obviously. I don't think that's going to happen. But yeah, I'm looking for some decent movement on that to the upside now. So if we can get a bull day in today, that might start a little bit of a rally on this one. New Zealand dollar, a little bit of weakness is long overdue. Market's just opened. Just putting in a bull candle at the moment, just testing the pre-market high. So New Zealand seems a weekday yesterday. Yeah, so New Zealand had a down day yesterday. Obviously, the Swiss franc was massively weak, so it's beaten that. But if you look at the Aussies yesterday, the Aussies had a down day as well. So you have a down day against a down day. What you end up with on the Aussie is Aussie New Zealand is a weaker Australian dollar still, which we know. We know the Australian dollar's weak at the minute. So if you want any short-term opportunities, I've been monitoring the pound pairs today for reverse alerts on lower timeframes, looking for short opportunities. So if we can get any pushes to the upside today on anything pound-based, I'll be looking for short entries on everything pound. I mean, it's all coming down at the moment, unfortunately. So, but if we can get any movement to the upside, those are potentially good entries today. Just see what happens with that this morning. There's no ADRs today. Nothing at all. The EA hasn't got me into anything this week. Yeah, I mean, it's just not got me into anything. We haven't had anything extended in trend direction at all this week. It's been one of those weeks. So, yeah. Can't get any exposure on. The only exposure I've got on is my old Aussie. So, a bit of a light week this week, but hey, I don't care. I had a really good month last month. I'm happy with a quiet week. So I'm just monitoring. I've got one position on the funded account at the moment. Stops above the high, pretty much in the same place as that one. I've only got the one position on though. So let's have a quick look at the DAX from a support resistance perspective. So obviously we've pushed down into support here, and that's where we basically got the rejection yesterday, brought up the support. So what I'm looking for today is if we're going to get a continuation. So if this rollover is going to start, and we are going to start next leg down, what I'll be looking for today would be obviously this to be that kind of movement and start a new down and come and retest, at least retest yesterday's low, if not go obviously further down. So this morning, because we've got the gap up, obviously we've made a little bit more traction into this area where the sellers really started to kick in on FOMC. So I'm hoping this is going to hold this morning, and obviously the first move is to go for that gap fill and then potentially hold the position for further moves to the downside. So I've got all TPs down here at the moment, but I'll probably take at least half of it off at the gap fill if it gets there, and then I'll let one run this morning and see if we can get down there. But downward, if you look at where we've got downside, so if we break this low that acted as support yesterday, next downside really obviously is going to be here, but there are a couple of levels of potential support resistance along the way. But I mean, unlikely we're going to get more than an ADR hit today until we get non-farm. Obviously, non-farm is going to send everything going nuts this afternoon. So, but again, this morning we have the potential this morning of exactly what happened yesterday, of just going sideways at the open, and just having a choppy. Where are we yesterday? Here we are. Just having that chop fest, because we've got big news coming. Then the big news happens. Yeah. So again, we got non-farm payroll today. Quite possible we're going to do that, which is why I've got fairly wide stops on it today. We are just going to chop around today. That's fine. If we do get the gap fill, brilliant. But if we're going to get a chop day because of non-farm, just have to sit in it. But we'll see. Looks like it wants to push at the moment. It's trying an opening range break. Right. So there's nothing obviously on ADRs at the moment. We've got quite a few weeklies. It is the last day of the week today, obviously Friday. So a few of those extensions, most of it is pound. The bigger extensions are pound this week, obviously, because of the rate announcement on the pound. 4-hour extensions, we've got quite a few, again, mostly pound related. So there's good opportunities on fades on all of these. Whenever you get a big, strong move, the market will fade these moves quite often. Just retesting pre-market highs there. So yeah, there is a chance that these might all get faded. I think non-farm payroll, obviously, we're going to see a lot of volatility across the board on all instruments. So if we get any big spikes to the upside on the pound, those are potentially good entries to go short, I think, today. So I'll be watching the pound during non-farm and just see if we get any sort of big, strong pushes where we start a little accumulation, which potentially could start a drop down. So, so those are the extensions we've got there. We've got hourlies, the 21s. We've got pretty much the same extensions, as you can see, on the hourlies as we have on the 4 hourlies, and the same on the 14 RSI, which is the faster RSI. We've got the same things extended there, apart from pound odd is extended on the 14, which isn't extended on the 21. But that is very extended on the 4 hour. So we'll have a look at the 4-hour extensions, because obviously the hourlies are the same thing basically. Aussie New Zealand we know about. Obviously that's massively extended, as we know, because I'm in it and I've been in it all the way down here. This thing is just not given up the ghost. But this area of support resistance I identified here, which was this area here and this area here. Can't see it very well because it's very zoomed out, but there's good support resistance bounces on all of these levels. So this is where we've sat. We hit that to the pip pretty much. I know I say it doesn't hit to the pip, but this hit to the pip, literally. I say hit to the pip. All right, we missed it by 1.4 pips, but that's probably because my line's out, you know. I don't know. But we hit it, basically. So this zone here, between this line and this line, is these old support resistance levels. So when you get such a strong move in one direction with no profit take, it has to give up at some point. And the market, as everything, looks back for levels where we've reacted previously, and this is the zone. So as you can see, when we got down to here yesterday, we paused in this zone, and this morning we haven't managed to have an attempt on the lows at all during the Asian session. So it is slowing down very nicely here in this area. So I'm looking basically, as you can see, the EA took another position for me this morning. I've already got staggered positions to get a little bit more aggressive on this, which I've put on manually here. Some of these are EA. I think 2 of those are EA, 2 of those are mine. Or 1 of them might be EA, 3 of them mine. So I'm not looking to put any more size on this, obviously, but what I'm looking for today is to come and hopefully test yesterday's high and get a push up and hold somewhere above yesterday's high. So basically what I'm looking for is a bull candle today. Yeah. Ideally, a bull candle like that. So we actually are breaking and holding yesterday's high there. So yeah, Aussie New Zealand very extended on the 4 hours, you can see, and it's just starting to come out of extension now, grinding up. So, but we're going to need a bit more momentum on this. Ladder, am I still in my oil long? No, that was a scalp. So oil, wish I was. No, because I took the oil on my funded account. I was in and out. It worked. I didn't take one on this account. I should have done this. I mean, you know, you can see my red line here. Yeah, it's absolute textbook. This is what I drew in yesterday. Yeah, in yesterday's session, I said if it comes down and tests this area, this is more likely where we're going to get the bounce from. I didn't take it on here on this account. I'm just keeping this account a little bit flat at the minute because of the Aussie New Zealand exposure that I've got. And as I say, I'm concentrating on other areas at the moment, scalping. But yeah, that was the setup, and it worked perfectly yesterday. Beautiful. The first one didn't work. So if you look when we went down to lower time frame, this is where I said initially here potentially to take the entry. That entry would have got stopped out if you'd have had a stop on it, obviously. That level there, the second entry, that tested that perfectly. I think this is the one I posted in Telegram, I think, isn't it? This one. I can't remember. Oil. Yeah, there we go. Is that right? I was looking at 5-minute chart. That's why it looks different. So I'm just trying to find. There's the Asian session yesterday. Oh, sorry, it was here. It was there. So yeah, it was around this area basically. But yeah, no, I'm not in it because I'm in and out. My funded account is in and out, scalp done. If I've got $500 profit or $1,000 profit, I'm out. I'm done. I don't hold stuff in that account. It's the scalping account. But yeah, if you're looking to take a position, obviously the play on this is that being our low, higher low. Sorry, new high, higher low. We're looking for a higher high, aren't we? Stopped out on the DAX. So yeah, that's the play. Is to just ride this up to 110. So basically just buy any pullbacks really at the moment, unless something happens with oil. You know, anything can happen to change the current climate, the current situation. So, you know, look at the market structure on it. Short-term market structure is that at the minute. The longer-term structure is looking for that. So, you know, any kind of pullbacks really, double bottoms, anything ADR hit to the downside, just buy oil when it's pulling back, when people are profit taking, get in. DAX is going long this morning by the looks of things. I've still got one on. I'm stopped out of one. I've got one on. Weekly range on the Euro CAD. So yeah, oil looks good. It looks good for longs. All the other indices, obviously, we started coming down yesterday. So you know, the Nasdaq, you can see the rollovers starting quite nicely. S&P, Dow, and then you got the DAX, which has only just started, which is why I'm short, because it's behind everything else at the minute. It's lagging everything at the minute. So I'm looking for a little bit more downside momentum on the DAX. But obviously this morning it's disagreeing with me. Right, so yeah, just going back to these 4 hours. Oops, hold on. Aussie New Zealand, Aussie US. So Aussie US just tapped on the sorry, not Aussie New Zealand, CAD Swiss. CAD Swiss hit to the upside. We've got a very weak Swiss franc again at the minute. So that's hit to the upside. So good potential short opportunity for a pullback on that one. So worst case scenario, pullback or potentially a drop. It's very difficult to tell, again, what's going on with the Canadian dollar. Every currency at the moment is very, very hard to predict long term because it's all to do with interest rates and inflation. And everything that's mentioned that could possibly have a positive or a negative skew on bias is just making such a big impact. You know, the market's just flipping long and short and long and short. It just doesn't really know what way to go on anything at the moment, which is understandable. So it's either going into massive squeezes or it's just erratic. So with this one at the minute, the Canadian dollar at present will be powering up with oil and with the US dollar. And at the moment, obviously, we've got a weak Swiss franc. So this is taking full advantage of that. But at some point, we're going to get, you know, a decent drop on it. So dropping down to lower timeframes, waiting for those reversals to kick in. But again, this is the problem at the minute. Reversal alerts are happening this is a great example, are happening so late at the moment because the strength of movement is so fast. You know, we're getting these massive big stretches and then they're sort of fading down. And by the time you get an alert on something, it's too late a lot of the time at the minute. So, you know, if you're seeing alerts happening, when you're monitoring the dashboard or whatever you're using, when you're seeing these alerts happening, you want to take the tight ones that look like good M patterns happening within a certain number of candles. The EA, if you're using the EA, it's actually got a filter for that. So you can filter for a number of candles in the alert. But yeah, these big ones like this, I mean, if you get a bearish engulfing coming in here, for example, and it's an outside bar or something, that's the best possible signal. Price action is always going to be the best possible signal, but you're going to get hundreds and hundreds of these, and most of them are going to fail. So, you know, this is why we use market structure, because market structure is actually saying, yeah, we are actually on the way down now. But obviously you are always going to get in later than price action. Every indicator lags price action, but price action is unpredictable and erratic and will give you 90% negative false signals, won't it? There's an argument. I was watching a video the other day actually by Ali Casey, and he was saying about you know, the bullish engulfing and the bearish engulfing, and it's the big pattern that everybody with price action goes, wow, bullish engulfing and bearish engulfing, it works so well, you know. But look at that bearish engulfing there. It's a brilliant bull signal, isn't it? Because if you think about what a bearish engulfing is, it's strong selling pressure in an upward trend. What are you in? An upward trend. Why would you go short in an uptrend? So what it is actually saying is, right, we've really started our profit take move. What comes after a profit take? A next leg. So bearish engulfing is actually a bullish signal. You just need to pick where you're going to put your stop when you get the signal. Get in on the bearish engulfing, give it a little bit of wiggle room, and you're off. So it's actually the opposite signal, isn't it? I'm going to test this as well. I've got an EA that does bullish and bearish engulfings. I'm just going to test that. But there's so many of them, and this is the problem with price action. Yeah, there's a bearish engulfing there. Yes, it would have worked, but not particularly well. There's a bullish engulfing there. That failed. There's a whacking great bearish engulfing there. That failed. Whacking great bearish engulfing there. That failed. The bullish engulfing there, which works beautifully, followed by a bullish engulfing, followed by a bullish engulfing that worked beautifully. But, nothing's ever going to give you more than 50% as a strike rate, is it? It just doesn't happen. Anyway, so yeah, reversal alerts. Just be a bit careful with them at the minute because of the strength of these price movements. News weeks, this is why I haven't traded much. News weeks are very hard because you just get so much volatile movement and everything moves so fast. You just don't get time to react to anything. You're better off not reacting or reacting on small time frames with tight stops. So this is what I've been doing. I'm long on US dollar CAD, Johannes. Yeah, US dollar CAD. I got out of that one on Wednesday. Day early, but I got out. But yeah, US dollar CAD looks good. Yeah, look, buy the pullback. So not quite extended on the hourly yet. M15 you have been. You've got a W pattern going in. You're about to get a reverse alert. Well, you were until that wacky great candle came in, but that is potentially double bottom leg for a W, isn't it? So yeah, I like US dollar. Yeah, I mean US dollar you want to be long, and pound you want to be short. It's just trying to find a way to get in. Got in on the higher low, thinking about it, taking it off soon and adding it back on ladder. Yeah, oil. Yeah. I mean, it's up to you with oil. If you're happy with your profit, take it. It is starting to double top at the minute. Just be aware today, it's non-farm payroll day. This is an H4 chart, obviously, but you're going to get sideways movement today, I think. Morning, Steve. Morning, Amit. So yeah, just be a bit careful today with choppiness. Don't want to get chopped up. EuroCAD. I said it was a short. All these euros, I don't. This is just not the euro. There's nothing going on in the euro that should be long. It is starting to roll over. The rollovers kind of kick apart from the euro pound. This probably will be long. Of all the euros, this is the one I'd take long at the minute. But yeah, euro is rolling over now. So euro was always on my radar for shorts, and it's back on it fully now. So I'm just waiting for pullbacks. Again, the EA has not managed to get me into anything since we started the move down. So had no extensions there. Just not had any opportunities apart from euro pound, which is the one I wouldn't want to take, to get in on any of these euros. So this is why I'm flat at the minute. I just haven't had any signals. Just haven't had any signals or opportunities, which is annoying, but that's the way it goes sometimes. Are we expecting a 1% or 100-point increase on interest rates on the US dollar next month? Don't know. Bailey came out yesterday and said we should not expect 0.7 to 0.75 to be the new norm. Because that's what everybody's doing. Everybody's following suit with 0.75. I don't know quite why they get this 0.75 from, why they use 0.75, but they do. So I'm not quite sure why that is the figure. But it's one of those things. A 1% increase historically is hard for the market, I think, to stomach. If you go back in time, don't know how far this goes back. If you go back in time and look at every time we change rates, it's all done in quarter percentiles. Yeah. We very rarely move 1%, if ever. I don't actually think we've ever done it. Obviously that's COVID starting. Oh no, it's not. This is 2008 financial crash. So even when we came out of that recession, if you want to call it that, we never went 1%. It's just not done. I don't really know why, but it's not. We don't do it. So I doubt very much whether the Fed would be the first to do it. But you never know. Stranger things have happened. At the moment, it's anything can happen at the minute because we are in an absolute mess. There's a news article last night, just to give you an example, just from the UK's perspective. If you had taken out, I think it was a 200,000, if you bought a £200,000 house and you'd taken out an 180,000 loan mortgage on that house last December, a year ago, you would have been paying something like £711 for your mortgage over 30 years. If you'd have taken out the same mortgage today, you'd be paying over £1,100 for the same mortgage. That's £400 increase, and that's just an average. So if you've got a worse credit rating than others, you'll be paying more than that. And the banks are starting to think twice about loan to values and all that sort of stuff with mortgages. So the interest rates from this time last year to now, you're paying roughly 50% more for everything. And when you're looking at mortgages, that's about 40% of the average income in the UK has got to go out on your mortgage now on an average house, which is about 300 grand or 350 grand or something. So it's getting to the point now where you can't move house, you can't buy a house because you can't get the loan to value, and you can't remortgage. 40% of the UK population in the next 12 months, their mortgage rates are coming to an end and they have to remortgage. They're estimating half of those people, those 40% that have got to remortgage, aren't going to be able to do it because they won't get one. Because literally, it's gone up so much in the last year that they literally do not meet the criteria for lending. So what happens? Are we going to make 25% of the UK population homeless within the next 12 months? Because at the moment, that's what they're saying is going to happen. And imagine what's going to happen in the US, who tend to be a little bit worse with all this stuff than us when they get it. So if you put up the interest rates by 1%, you're making that situation, which is the biggest outlay of everybody on the planet is buying your house, you're making that situation much, much worse, which is why I think they don't go to that 1% level. You want to get there as slowly as you can to whatever your target rate is going to be, but your target rate has to change. Yeah, whatever the Bank of England or the Fed are calling as their target interest rate now isn't going to be the target interest rate in 3 months' time because the situation will be different. And it's all about monitoring inflation. This is why inflation figures are so important. When that starts to go like that, right, we don't need to raise interest rates anymore. We will monitor interest rates, inflation. And if inflation starts to do that, we can bring down everybody's cost of living. But if we get to 5% target, for example, which is what the Fed's talking about, and the interest rates are still doing that, they have no choice but to go up and up. And this is why in the UK, we got up to sort of 13 to 15% last time. Can you imagine paying 20% interest or 18% interest on your mortgage? Well, you can't. I mean, you can't do it. You physically can't afford to do it. So that's why I don't think we'll get a 1% increase, but I don't think they'll stop doing 0.75s until that inflation figure gets in control. And obviously inflation figure, if that keeps coming out high, will drive the currency price up. The currency gets stronger on inflation, which is why we see interest rates driving currency prices back down again. Doesn't mean that inflation is going to stop. So all it is a pullback on another move up, which is why you should be short the pound and long the US dollar until they bring out inflation rates, which say actually we're getting on top of it. then those currencies will start to move the other way. But yeah, to answer your question in a long-winded way, Amit, no, I don't think they'll do 1%. I don't think they'll have the balls to do it. I don't think anyone will, because it's too catastrophic for everyday Joe that actually has a mortgage. If you've got a load of money in the bank, if you're sitting on £500,000 worth of savings, happy days. But who's sitting on £500,000 worth of savings at the moment? We're in a cost of living crisis. It's not happening. So, and all countries are doing the same. And it's these countries which are putting their rates up smaller than expected, which we've seen with the Aussies. Yeah, look at the Aussies. Where was the Aussie rate? There. Right. Look at this, and this is a good indicator. The Aussies went slightly lower, didn't they, on the 1st of November than expected. So they started to slow it down. If their inflation figure comes out as worse than expected, they're going to have to now do way more than 0.5% or whatever they were forecast to do. They're going to have to up it dramatically higher, which is going to make everybody poorer a lot quicker. And you're also getting behind that curve. Yeah, the idea is to get ahead of the curve to drive it down. Think of it like a police chase. Yeah, you got a robber driving along in a car. You got a police car running alongside it. If that police car doesn't accelerate faster than the robber, that robber's just going to carry on going forever. You've got to get ahead of it to stop it. That's what we've got to do with interest rates. We've got to get interest rates to a point where they start to stop that curve going up. But if you put interest rates up too high, people will just go bankrupt. People lose their jobs. 50%, 100% more unemployment in the next 12 months is what we're forecasting in the UK. That's not 100% people losing their jobs. It's 100%. So if we've got, 20,000 or 100,000 people unemployed now, in the next 12 months, we're going to have 200,000. The government's got to pay for those people, which means the government needs more money. The government needs more tax. You tax people more, cost of living goes up more, which means you've got to put up interest rates more, which means people get poorer. And it's a never-ending spiral of doom. And that's what we're in. That's what it's called a recession. Everything just slows down. We can't spend any money, so the whole economy stops, which means people lose jobs, people lose houses. And we yesterday, always first, aren't we? We yesterday were officially first people to say, yep, we're in a recession. He's the first person that's had the balls to come out and actually say it. The Fed have been skirting around the subject for the last 12 months, not actually saying that we're going to have a recession. Bailey's come out and said, sorry, mate, we're in a recession. Tighten your belts. It's going to get windy. So putting up anything more than 0.75 would just make the situation worse. So anyway, how does that affect currency? Bigger interest rates means currencies tend to come down, but only for short periods. And it's the inflation figure which is the one we need to be paying the most attention to. That gives you your long-term bias. And inflation, is going up everywhere. So you're going to get currencies pushing on inflation, but overall, everything's coming down, and the US dollar is going to win until they admit they're in recession. But who knows? Which is why it's such a mess at the minute. You can't make any long-term decisions. Short term, no problem. Long term, very hard, because it changes every day. When the wind blows in a different direction, something different happens. Euro CAD is the other one we got extended to 4 hour, very extended to the downside. I'm looking for shorts, so I'm looking for pullbacks. So I'm not really interested in that. Euro pound, Euro pound. I would be interested in scalping this long on pullbacks. So if you get any pullbacks on this, that's not a particularly good propulsion gap there. Might be better on M15. Yes, better on M15. If you get any pullbacks into ADR, I'd be interested in scalping long on this at the moment. Just purely because the pound is going to be weak, and it's quite nice and orderly, the euro pound, and it's got quite a tight ADR. So it doesn't move very fast, and it's nice, easy and quick thing to trade. But I'd want it to be very nicely extended and ready for a new leg up. So where we are at the moment, it's ever so slightly coming down. Now we've got that news from Bailey. I would expect a sort of gradual climb on euro pound, and euro probably the only thing at the moment I'd be interested in longing, that euro pound rather, and only euro pair I'd be interested in longing. Everything else is just there at the minute. Euro yen, again, no talk out of Japan last night, I don't think. Really keeping an eye on anything the yen, the Japanese says. There we go. We are talking again. Look, there are no plans. They said that. Do you remember? They've said that every time. I've looked at this news. Go back to the live rooms. We won't be able to find it, but somewhere in the live rooms, every time they've said this, we've had an intervention come. So they're not talking about manipulating, but they will at some point. FX should move steadily, reflecting the fundamentals. FX rates fluctuate due to a variety of factors, blah, 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 blah. So again, we've got a little bit more talk. We've had radio silence for a couple of days. So any unhappy moves to the upside on specifically US yen, this is the one they're worried about the most because the vast majority of their exports go to the US. So this is the rate they need to keep on, and this is the rate that's affected the most because they pull the money out of the US to put it into the yen. Any moves back up to this 150 level, even it's only an ADR away. Yeah, it's not far at all. Up to here, half an ADR, or an ADR rather. So if we get up to here, again, I would be happy to start building a short position up here because the next intervention you're going to make a load of money, and it's going to come unless we do start buying the yen, and for some reason the yen starts to strengthen and carries on coming down. But we are expecting strong US, so we'll see. Obviously, we're having a bit of a weak US off of the rates, but it'll pick up. So I don't like that as a long at the moment. So I was looking at that and thinking, hang on, we're not extended. That's because I was looking at the euro yen initially. So yeah, intervention wise, I want to take shorts. If I'm going to hit the button on the yen, it's going to be a short. So don't like that down there. But mean reversion, it quite easily mean revert back up again. So pound CAD, nicely extended to the downside. Obviously, if you're going to long the pound at the minute, you're brave. It's one of those horrible situations. It's so unbelievably stretched and extended that yes, it's highly probable that we are going to get a profit take move on it. However, it's a fundamental move, so it could just accumulate and drop. Look at the Swiss franc as a good example of that in play. Yeah, that's the move we just had on the pound. That's the move we got after we had that move on the Swiss franc. So it's a fundamental shift. This was an unexpected fundamental shift. This was an unexpected rate increase. But the news on the pound yesterday was as bad as it can get, really. So there is every opportunity that might happen. So if you try and mean revert that without a stop and you try and take a position long on it, you could get stuck like this, couldn't you? So it's very dangerous to take longs on the pound at the moment, I think. So I'm not interested as much as it's extended, and as as much as we're at a very nice potential support, and we've got a lovely little support back up at 150 ADR as well. I'd be worried about doing that. I'd be much more happy to take a short, start building a short position anywhere above the 72 moving average. So yeah, not really interested. But equally, again, with these pounds, like I was saying when I first came on this morning, I'd love to find an opportunity to get in short, but it's very hard. You can't hit the short button here. Everything in your being says you don't sell into support. But if that support breaks, it is just going to tank, I think. So I can't hit the sell button there, though, because my brain is telling me, and it knows because it's seen it happen 1,000 times, that there's a pullback due. But at the moment, you just can't tell, can you? With the way the market is and the fundamentals, you just can't tell what it's going to do. And this is obviously really skewed because you zoom in, This is normal price action. It's all being skewed by this completely abnormal move that we had with Liz Truss announced the mini budget and Bailey's bailout. So this is normal price action. So if you look at where we are from a normal price action perspective on the 4-hour chart, we've got potentially 2 or 3 days where this thing could just grind up. That's where I want to get in when we're back up in that level. So pound CAD, pound yen. Again, pound yen, very difficult to tell. I'd want to be hitting the short button, definitely on the pound yen. But yeah, I didn't take anything ahead of the rates because I didn't know what was going to happen. So missed those. It does seem at the moment that we are so driven by news at the moment. It's very difficult to sort of get a position started because it seems that every day you've got some unexpected news coming or some news coming that's forecast that could well completely upset the apple cart and send everything flying in the opposite direction. So, you know, you can get a little bit too over focused, I think, on news. And I certainly feel like that at the moment. I'm thinking constantly, do I want to take a US position? No, because I've no idea what this is doing today. Because everything is in an absolute fundamental mess at the minute. So, but with the pound, you know, didn't take that. I didn't take that. I just haven't been trading the yen for a while, but they would have all played out beautifully. So, you know, the H4 RSI extensions are still working fine. I've just got such a constricted view at the moment because, you know, I've been stuck the wrong side of interventions and big news events like this before. And it's just, you know, you have to take a massive, massive loss when you're position trading. So I'm looking for currencies with a little bit more stability, which is obviously becoming very difficult at the minute. Pound New Zealand. New Zealand obviously has been very, very strong. We should see some weakness starting to creep in now. We are seeing weakness creeping in across the New Zealand pairs now. So any kind of pullbacks would be lovely, but obviously the pound's tanked, so it doesn't matter how weak the New Zealand dollar is. It's, you know, the pound isn't going to get that push at the moment. So very small pullbacks, which I was saying on the pound pairs. In theory, you could take 15-minute extensions, and they're probably going to work. You know, drop down on, I mean, M5 and M15 is too close, but you could drop down into M1 and take M1 reverse alerts on M15 RSI extensions. Very short-term trades. Obviously, bear in mind if you're thinking of position trading on those timeframes, you know, just be aware of the bigger view. It's a long way to go when you're taking 1-minute trades. An ADR can hurt a lot. Yeah, pound New Zealand looking for pullbacks to get in, and pound US the same. So all pairs, everything's just lined up wrong. Hence me being flat at the minute. So, but lower time frames are the way forward at present. So my bias at the minute is basically sell everything. Oh, sorry, buy everything US dollar, sell everything pound, and sell everything euro. New Zealand and Aussie, not too sure on. CAD, I'm kind of like that because of the US dollar and oil. So I'd be more long bias on CAD pairs. So pullbacks on US, like US CAD to getting long, any pullbacks on pound to getting short, any pullbacks on euros to getting short, any pullbacks on CADs to getting long. It's kind of what I'm looking for, just not getting the entries at the minute. It's not getting the market doing what I want. So I'm waiting. Unfortunately. Horrible being in a waiting game. Has anybody got any other pairs they want to look at specifically this morning? I haven't really got anything else I want to cover this morning. Should we see if we can find Greg? Let's do a Greg hunt. I'm not sure what triggers ads. They seem to be very hit and miss. I think it's obviously some kind of time limit on them. No, I'm not getting any ads. Trying to find one. No. oneyeartarget.com. Right, this bloke worked on the Chicago Board of Trade in 2011. Not sure what he was, but he's selling a course. Unger. I've heard of Unger, actually. I think he is actually quite good. Can't find him, can we? Mr. Secker. He's not there. Not there today, unfortunately. Gold. Want to look at gold? Yeah. So gold obviously is a US cross. So it will do inverse to US dollar. Oh, God. DAX this morning. Wants to go long. I can't get, I'm really struggling to call anything at the minute, to be honest. Everything just seems choppy. And you either get on these or you don't. And you get stuck. That's what it feels like at the minute. It just feels like we're stuck. This is what I was saying about news weeks. Stuck, news. Stuck, news. Just waiting. There's nothing. It's really, really hard to trade anything at the minute until the news events come out, which is why I'm looking forward to next week, because we haven't got any. You know, it's just like, you know, what we've had today is 3 candles on M5 and we're stuck for half an hour. And now we are potentially pushing out again. It's just so, and we're not even doing that, are we? There you go. Closed. We're just not going anywhere. Feels like pulling teeth at the minute. Anyway, sorry. Gold. Moan about the markets. Don't moan about them when they're going absolutely nuts in your direction, do you? But when they're not, when they're just sitting, chopping you about. And that's the thing that does my head in about scalping, which is why I hate scalping. As much as I love making the money out of it, I hate doing it because I feel beaten up. When you take a position, like I've got a short on at the moment on the DAX, you take that short position and it goes against you a bit. And it sits there and then it comes back to your break even. And then it goes back. And then 1.5 hours later, it stops you out. And you just feel like you've been in a boxing match for 1.5 hours only to get knocked down. And then you get a 10 count, you get up after 8 and go, right, let's have another crack. Okay, DAX, you're going long. And you go long. And then it goes, oh, all right, and actually, no. And it does that. And does that. And it does that. And then you get up to there and you think, oh, I'm just getting out because this thing's not going anywhere. And as soon as you get out, it goes bang. And you get days, and this is what I was saying yesterday about these rotation days, which is what we had. You just feel like you get beaten up. And then you have trend days where I'll bag 5% in 25 minutes, walk away and go, oh, this is easy. You just got to psychologically ride all these crap days that we're having at the minute and get through them. But anyway, that's the whole bit. Gold is a short, as far as I'm concerned at the minute. We've got a triple bottom bounce at the moment, but obviously if we're going to get continuation strength, which we should do short term at the moment on the US dollar until the next inflation figures come out, yeah, we should be looking for shorts on gold. So selling pullbacks, basically, of which you have one at the minute. Just had a 15-minute reverse alert, almost got invalidated, that one. So that's the break. So you've got your Asian low, yeah, FOMC, break, retest. We're just retesting the propulsion gap now. So if the market is still long US dollar, if they've positioned long and they want the long, then this is where on gold you should see that happening. If you look at the US dollar pairs, whoops, yeah, same thing with the US dollar. We're pulling back to pre-FOMC. Yeah, FOMC, bang, interest rate change. We're pulling back to that level. So if that move is legit and the market is long US dollar, this is where we should continue. Yeah, we shouldn't let it get back down here. we should be going. So this is where you want to be buying the US dollar now, and i.e. selling gold. US dollar Swiss, we've had a much weaker Swiss franc, so this has obviously had a lighter pullback, and the yen is just obviously a mess. But yeah, US dollar CAD, if you look at things like Euro US as well, weak, that's weak. There's nothing, see, this is trouble at the minute. When you're trying to do analysis, there's nothing easy to analyze to show strength or weakness in something, because everything is in its own little bubble and its own little world at the moment, in its own little mess. Like the pound US dollar, I mean, the euro, you know, these you short from here because it's just dead on its feet. As soon as that US dollar powers up, this thing's coming down. Same with the euro. But how do you gauge US dollar strength at the moment? You look at the Dixie. This is the Dixie, basically, upside down. So this is US dollar strength. Should continue from there, shouldn't it, really? Dixie's just basically gone drop, accumulation, drop, accumulation, drop. So pending orders under lows, basically, in the direction you're expecting things to go in, is another way to get in very easily. So stick a pending order under there. If this pulls up today, stick a pending order under there. If it keeps pulling up, stick a pending order. Eventually, your pending order is going to get triggered, which will be on a reversal alert. And then, boom, when it goes, it goes. So gold, yeah, you've had the reversal alert. If you're going to take the retests, pending under there. When the US powers up, you'll be in. If the US doesn't power up, move that pending, move that pending, move that pending. I mean, this is basically what I used to do before I built the reversal alert indicator in the EA. The EA basically does exactly this, if you think about it. It just doesn't place pending orders. It just gets you in on the reversals. Same thing. But yeah, shorts on gold I would be at the moment. Obviously, look at what's happening. But, you know, it's always going to come to an end at some point, isn't it? Your trend will end. And this is the problem with trends. Yeah, people go, oh, that's probably a pullback. This is the really good example, actually, gold, of why trend traders fail. I mean, let's say this was a longer trend and it had come from down here somewhere. We're green. You want to go long. Yeah. So people see it coming down here and they go, oh, it's hit the 200. It's just a deep pullback on a continuation. And then all of a sudden it goes down and they go, oh, right, okay. So we're possibly starting a downtrend. They see it come back up and then go back down. And then you go, oh, yeah, that's definitely a downtrend. You get one trade out of it. And then the trend ends. So trend traders would love to get in here and ride the trend. That's what trend trading is, isn't it? You buy you sell the pullbacks in the trend, you add, you make loads of money. In reality, very, 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 very difficult to do, isn't it? Because by the time you've identified something's trending, it's ready to stop trending and go back the other way because they've made so much money on the way down, they want a profit take. You know, no system works very well all the time, which is why you get stopped out all the time. So yeah, you know, a triple bottom bounce, very strong bull zone there, isn't it? But the fundamentals are all saying that. And that is your decision to make as the trader. You need to have a bias and you've got to stick with your bias. And if your bias is like mine, the 24 and the 72 moving average, I wouldn't be doing anything but selling that thing. But you know, and Aussie New Zealand is a prime example of it going wrong for me. Yeah, this is a trend. This thing's been trending for absolutely ages, hasn't it? A year. Yeah, this is going back to 19th of November. It's been trending all year. I've been riding it all year. I'm in now, and the thing's decided, actually, no, I'm going into a full-on bear run now. I got in expecting continuation. The trend failed. That's just what happens. Yeah, I'd ridden this a lot, obviously, as I've made a lot of money out of this year, but at some point it's always going to finish. You never know when that's going to be, and it's usually with a fundamental shift. New Zealand dollars had good news after good news after good news after good news. Aussies had neutral to bad news after neutral to bad news, and that's basically the result, which is why you keep on top of fundamentals. It just happens. And the thing is, when this is where you get stuck in these squeezes, when you get into a position and then the fundamentals come out after you're in your position a couple of times, that's it, you're stuffed. You can't do anything about it. You just got to dig your way out. And this is why we get into these squeezes. Absolutely right to get in where I was fundamentally, trend-based, entry-wise. Nothing wrong with my entry whatsoever. It's just the world decided to change fundamentally for these two currencies and I got squeezed. Nothing you can do about that. You just have to suck it up and deal with it. But yeah, if you're getting in, I mean, in trend trading, I used to this is where I got these moving averages from. A guy called Strat, who was one of my mentors, taught me about these moving, not these particular ones, just the moving average ribbon. And the concept, which is very simple, of when it's green you buy, when it's red you sell. Sounds simple, doesn't it? Try it. Try doing it at the hard right edge. Totally different. But the concept of the, what was I going to say about? What was I saying about these moving averages? Mine's gone blank. Oh yeah, breakouts. So the trend trading strategy that he used and was taught with these was basically when you get back down into these were different moving averages in that system strategy, but when you get back down to here, you can either get in right there with a stop, usually underneath the lower moving average, or when you get down to here, you start pendings. So you start placing pendings, right? So we got down here, you'd have a pending there. We pushed down, we pushed up, we push back down again. You move your pending down to there. Yeah, push down. You could get super aggressive and move your pending down to there and you would have got a better entry. But the best entry is the pending order above the top moving average. Yeah, you get triggered. But this is what I was speaking about this morning. That would have been hell for 1.5 months, 6 weeks. You'd be in that long. For 6 weeks, you'd be in drawdown. And 3 times you'd have popped your head into profit, but you'd have spent 6 weeks in drawdown on that before the trade actually worked. And what would you have got? 1-to-1. Unless you held it for another 3 months and waited for the 2-to-1. And this brings me slightly back to what I was saying yesterday when I was having a conversation with somebody in here when we were having that rant or that long conversation about the daily time frame. Why the daily time frame is the time frame that everybody institutionally trades, because that's the time frame that works. Everything intraday is chop. This is all intraday chop. Yeah. On a daily time frame, that's the strategy you use. On daily traders use either one of two strategies. There's only 2 strategies you ever use on a daily time frame. It's a daily break or it's an enter on close. So you either enter on a break or you enter on the close. And that's how all daily strategies in virtually all hedge funds, institutions work. They're end of day close, or they are inside bar or outside bar breakouts. The problem is, though, that trade might take 3 months to play out. Can you afford to take 5 trades a month? No. This is why everybody goes intraday, isn't it? But those are the ones working. That trader just showed you on the 4-hour chart is a prime example of how frustrating it is to trade the daily time frames. Yeah, if you'd have straddled that day and taken a breakout to the upside because of for a trend continuation, you wouldn't have got paid. You'd have got in June. You would have got paid August. Look at the same strategy on a 5-minute chart. We haven't got a moving average here, but let's say, I mean, you can see how choppy it is. I mean, you can't even do it on a 5-minute chart. No, let's say we're going into a downtrend here. You'd have to look at maybe taking using the hourly as the break. So you get in there, you're paid same day or the day after. take that one, you're paid 2 days later. But the chop, you've got to have big wide stops with this type of strategy. And by the time you've identified the trend is started, you probably only get that one, wouldn't you? And it might not have got far enough for you to take a profit before we got into an accumulation. It comes back and bites you in the arse and stops you out. And again, that's taken you 3 or 4 days. There is no easy way of trading, is what I was kind of trying to say. But pending orders definitely are the way forward, I think, which is market structure breaks. So all the indicator does is confirm those for you and get you in. That's what the EA does anyway. But it's all the same stuff. And again, we're going back to what I said about yesterday. Everything's the same stuff. You place a pending order in the market, that's fine. Why not use the EA, which will get you in on a confirmation of the break rather than the pending? It's all the same stuff. That is why I think to have long-term bias, then the time frame will not matter a lot. Yeah, which is what I do, and this is the thing. This is exactly what I do, isn't it? Every trade I take is based on the 4-hour. Normally, I'm looking for 4-hour RSI extensions to get in. I'm getting in on the lower time frames, but I'm not using a stop because in intraday you're going to get that. You're going to get smashed to pieces, but it is going to do that when the profit take starts. But if you try and do it intraday with a stop, you just get smashed to bits. And that's why everybody struggles. Doesn't matter. People say, what do you use for, which moving average do you use for your bias? What do you mean? On what time frame? There's all sorts of moving averages and all sorts of time frames you can use, and they will all give you a different bias. And it doesn't matter which one you use. It's just all it's doing is giving you a filter for a button. But like we said yesterday, if you took a long trade there because your filter was long, you were either in hell or stopped out 100 times on the pullback. Right, this is why breakout trading I find ludicrous. Breakout trading most of the time, you're trading after the move, well after the move has started. To get a breakout, you need an accumulation. Yeah, that's where you buy, not at the top. Because by the time you bought at the top, most of the time it comes back down because they got in here, made it go up there. By the time you've got in, they're ready to take profit. Why? This is exactly why everybody says, why is it every time I hit the buy button, just after I've done it, it comes back down? Because they started buying down there, you started buying up here. By the time you're hitting the buy button, they're taking their profit. It's obvious. We all do it though, don't we? Breakouts. Why do 90% of breakouts fail? Because a breakout is the end of the move. It's resistance. Some breakouts work, obviously, and this is where. But a breakout is basically price discovery. Yeah, breakout, price discovery. No, not interested in trading there. Okay, bring it back down. You put a stop there and a breakout there, and this is why breakout trading is so hard to get a profitable breakout strategy. It's so hard because the risk reward is so difficult. If you were to go with a breakout of this high here, your stop's got to be there, isn't it? Swing low. Your risk reward for a 1-to-1, that. Breakout strategies are just really hard to make money out of. I never found a breakout. Opening range breakouts work, but opening range breakouts work, like this morning. Here you go. This ORB, I got stopped out in that second one. This ORB worked because we are breaking out of such a small little range, and there is a reason for this candle. This is the initial cash balance that is put in at market open. So this is the initial flurry of orders sitting there from overnight transactions that needs to be executed. So this is why this candle is so big and fast, because it's all the orders going in. And then the market then decides which direction it wants to go. So these opening range breakouts work, and the risk reward is very easy to get on these. Yeah, there's your 1-to-1. We're up at 1.5-to-1 already, aren't we? But any other type of accumulation break is just very, 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 very difficult. Right. I'm just gonna. Haven't really got anything else to discuss this morning or cover because we're just waiting for non-farm payroll basically today. Did you review CAD Swiss? Currently looking, long looking. CAD Swiss. You're currently long, looking at closing around 74,870. Yeah, so up those highs somewhere. Yeah. All the time we've got this weak Swiss franc. And the CAD being dragged with the US and oil, then yeah, it's a long. The CAD's, and this is the thing, the CAD's been a long, everything has been short against the CAD since they did that interest rate change, but that was ages ago now. It's kind of played out. They're doing well. But it's this, we're back to the same old thing with the Swiss franc. It's a case of it's hot and cold, it blows hot and cold all the time. Position trade been stuck in since the start of July. Blimey. Yeah. I mean, you're obviously trying to mean revert that, I guess. I mean, your target really on this should be when you can get out. That should be your target. When can you get out of it? If you've stuck with this for months and you're still in it, excellent. You just need to get out where you can get out, really. How much swap did that cost you? Yeah. Yeah, that is the only problem with position trading. When you get stuck in squeezes, long term, you get swapped to death. So look at my swaps. It doesn't total them up, but I've got 10, 15, 25, 27, 29, 30. I've got about 30 odd dollars in swaps there. Been holding since October the 11th. Which is somewhere around there. Yeah, there's my initial entry. So yeah, that's cost me $30, that trade. Which in the grand scheme of things isn't a lot, but it is actually a lot, isn't it? It's 0.3% of my account, which is, it's not small. Oh, it's just Steve has got a positive swap on that. Well, that's all right then. It's always nice when you make money on your swaps, isn't it? Very nice. Very nice indeed. My indicator that shows me the spread also shows the swap costs, so I can factor that into the decision. Yeah, I don't. I mean, it's just a price of doing business. Swaps. There's nothing you can do about it. And if you're taking big positions, which you're holding overnight, then yeah, they will make an impact. But it's not a lot you can really do about swaps. It's just one of those costs, isn't it? If I'm contemplating that I could be in for a while, well, that's the thing you never know, isn't it, Dion? I'm never contemplating being in more than 10 minutes. Never happens. Timing, that's the one thing we can't do, isn't it? time. You get in and you get in, and that's it. You get out when it lets you. I was certainly not contemplating being in this for a month. Why would you? Why would you possibly contemplate being in this for a month? But then again, that's what everybody said, who was me included, longing the S&P. On that pullback, we were like, well, that's no problem. I'm not contemplating being in a short bear squeeze for an entire year. Although a lot of people were anticipating this. You know, we would get this December last year when we had the Santa rally and it dipped down this far. That's where everyone was like, is this the start of us paying for COVID? And then we started thinking about it, and then it happened, didn't it? So that's where we are now, and we're not getting out anytime soon. About £350 positive swaps on 5 entries. Very nice. Very good. Currently plus 6.3%, but been in drawdown for months. If you're in 6.3%, well, I don't know what the rest of your portfolio is like, but holding to 6.3% is like balls of steel. I'd be out way, way, way before that. But it depends how much portfolio you got on, you know. Yeah, it's decent. That's a decent profit. I'd take it if I were you. But saying that, looking at the CAD Swiss right now, I wouldn't be taking it right now. But you know, whenever you're looking at anything and trying to make a decision on whether you should get out, whether you should get in, or anything, look back and look at look. I always look back the most recent, obviously. First of all, look back and see, when did we last have 2 whacking great up days like that? Yeah, probably there, and maybe there. The vast majority of the time, what happens after you get 2 whacking great up days? To a certain extent there, but you got 3 there, and then a pullback. 2 there. It's highly likely you're going to get a pullback. What you have to decide is, can I mentally handle that 6.3% dropping to whatever it's going to drop to? Yeah. And take the chance that it is going to continue to go back up again. Because what you could be looking at is that. We don't know, do we? We've no idea. So, you know, profit-taking decision is very, very hard, and it's a personal thing. What does that 6.3% mean to you? Is that the mortgage paid? You know, like it's my prop account yesterday. I made 2.5 odd thousand in 24 hours. The reason I closed that position out yesterday on the stream and left it running on this account was because the difference between this account and the one that I'm running for the prop was the prop account paid my mortgage. So that 48 hours I've just had has now paid my mortgage. Does that 6.3% mean something? If it does, take it and use it. If it's just sitting there and you're happy to see if you can run 10% out of it, and if it drops down to 2%, you'll take it and go, oh, well, do that. There's no one can tell you, and this is why mechanical systems are very hard to work, because the mechanical system on paper works brilliantly. If it does this, do that, take it there. When you get to here and you see $300 and you're thinking, I'm going for a night out this weekend, that pays for that. Your brain wants to take that. The mechanical system says you shouldn't. And, you know, you can't teach anybody when to take profit. You can teach them that there are certain areas where you're likely to get price doing stuff, and you can show them that historically, when you get moves like this, typically something like that will come. But how much money is on the table is a very, very personal thing. And it's exactly the same as drawdown. You know, when should I start getting worried and do drawdown control? I don't know. When do you feel uncomfortable? Your uncomfortable and my uncomfortable are different. I'm sitting in Aussie New Zealand dollar at the moment, feeling slightly uncomfortable. A lot of people will be sitting there going, oh my God, this is a nightmare. It's not a nightmare, it's drawdown. It'll be a nightmare if it gets to 8 to 10%. Yeah. But everybody's got a different threshold that they work to. But yeah, it's a good trade. You know, and this is, you know, that is a beautiful entry there. That would have been such a small drawdown, but I would have been in there. I'd have been in there. I'd have been in there, and I'd have been out there, or been out on there somewhere. I very rarely get back above my initial entry. Very, very rarely, because I've got profit, and you know, my job is to take money, not to get myself back up there and go, ha ha, I knew it was going to go higher above this first entry. That's nuts. I got in there. I'm not going to wait for it to get back above my entry. I'm getting out when I've got X% I can pop over in my P&L. That's your job. So yeah, don't know the answer to that question. Take it if you want to, leave it if you don't. I'll just get rid of that. I'm going to have to dig myself out of a little DAX hold again this morning. 1.5% down on the prop account this morning as well. That's not good. Emmett, if you do not know what the market is doing, go long and hold it there. Pound US dollar, I'm in 50%. 50% drawdown? You mean 5%? You can't be in 50% drawdown on one instrument. You're in 50% drawdown on pound US dollar. Long. Sorry, I shouldn't change that one. That's the wrong one. Okay. I hope it's not a big account and you don't need the money. I'd be very, very worried about being in that. You know, Bailey came out yesterday and told us the entire world is going to explode in the UK and don't expect anything to go up. You can't. You should be feeling not uncomfortable. You should be feeling about. I mean, I'll go back to what I said yesterday in the live room. 90% of traders lose 90% of their money within 90 days. It's a statistical fact. The reason is because they over leverage. If you're in 50% drawdown on one trade on one pair, your leverage is about 3,000 times higher than it should be. Go back and watch the Boocamp. I think you completely misunderstood what I'm talking about here. You shouldn't be 50% drawdown. No one should ever be anywhere near 50% drawdown. If you're in 50% drawdown, you've given up. Basically, what you're saying is, I got it wrong. I've given up. I'll just lose the money. If you're up 150% on your account, again, you've completely missed the point. You should be up 150% of your account within 12 to 18 months. Minimum. You're gambling. You're just gambling, Emmett. That's fine. If you want to gamble, that's no problem. You know, there's a lot of people gamble. That's why 90% of people lose 90% of their money in 90 days, because they gamble. But it's fine. It's fun. I like gambling. I play poker a lot. But I don't play poker with my mortgage. Big difference. But yeah. Yeah, DAX just took off. I just watched that on my other monitor. Not quite sure what's going on this morning with the indices. Looks like we got some ECB talk. Has we got Lagarde talking this morning? Oh, Friday. Oh yeah, Lagarde speaking at 9:30. So this is the precursor to Lagarde speaking. Yes, just be a bit careful of the DAX this morning. We've got some talking head stuff. But yeah, I mean, even if it's a small account though, Amit, yeah, you're just saying it's only a small account to you is €2,500. That's fine. But why are you bothering to trade with a €2,500 account? Go and buy a prop firm and turn it into $100,000 account and trade properly with it. Stop wasting your money. Seriously. Stevie, been using these hedging on my Swiss pairs. So I've still been taking monthly profits. Oh, right. Okay, cool. Yeah, the hedging strategy is very, very good, but it can also get you into some nasty squeezes as well. That's the trouble with hedging, because you're obviously not taking trades at extremes, so you get squeezed. But yeah, share. I mean, share. I mean, to be honest with it, share how it ends if you want to. But at the end of the day, it is you are. I mean, you have to admit you are just purely gambling. You probably go down the casinos a lot, I guess. But there's no one in the right mind gets into 50% drawdown on their account when they're trading, and that's the gambling, which is fine. If you want to see, and a lot of people do, and I don't think there's anything wrong with it. People see this as a bit of a way to make fast money, and you will make fast money. There's people on E8 prop firm. They publish the results of the fastest traders, the top traders, all this sort of stuff. And there's people sitting there doing $60,000 withdrawals, passing evaluations in 4 minutes. They're not trading; they're gambling, which is fine. And if you pay $500, right, to do an evaluation, and you go long 5% on one trade, and that trade moves up and goes like this. If you took the DAX breakout there with a 5% risk here, fantastic. You just made 15% on your account. Well done. It's pure gamble. You're never going to risk 15% of your account on one trade, are you? 5% of your account on one trade. It's just, but this is what people are doing on these prop firms. And that gets them through the evaluation stage. And then they'll take it again. And there's guys, like I said, they're sitting there with $40,000, $60,000 profits on £250,000 accounts. They're not trading, they're gambling. But there's nothing wrong with it. If you can do that 3 times and one of them you can pull off a 60K win, excellent. It's just like walking into a casino and sticking, a third of your money on the first third, a third of your money on the second third, or all your money on the first, second, or third thirds. You get a 3-to-1 return or whatever it is. Job done. But you can't sustain that. You can't stay there and sustain that, can you? You're going to blow that account. So yeah, I mean, if this goes up now, and I hope it does. I hope this comes up and you get a lovely win out of it. But I won't be seeing you in a month's time. You won't be in here in a month's time because you'll be off doing something else. Which is fine. I'm not here. I'm here to entertain and keep myself sane. People do what they want to do. I don't mind. Even if you're only taking trades at extremes, you can still get squeezed. Ask me how. I know. Yes. Mean reversion is a good portfolio. A good trader will have multiple strategies. Yeah, you've got mean reversion, you've got breakout, and you've got trend. There's 3 strategy types, and to trade well, you need to be in all of them. You got to be able to trade all of them. So ADR reversals and mean reversion. Taking pullback reversals in line with trend is trend. The set files out there for all of these, apart from breakout. The EA won't reverse that, doesn't do breakouts. Although some people say to me it's a brilliant breakout indicator, because what they're viewing a breakout is that, which is fine. So I guess yes, it is a good breakout indicator as well, but it's not really what it's designed for. Wow, wish I'd have gone along the DAX this morning. How many times have you said that? So DAX, we've got a gap fill scenario again. So there's a lot of gap. The earnings season is the gappy time, isn't it? So That one get gap filled up. That one gap filled there. So yeah, if you want to go short on the DAX, might need to wait. Might happen today. Might not happen today. Don't know, but at some point that's going to get filled. So start a short position there if you want, and scale into it. We've got the gap fill to play. I'm going to start a short position on this, I think. Could well go from here, couldn't it? Tell you what I'm going to do. What have we got? 175. How far is that? 50. I'm going to start a short position on the DAX. Oh, hello. Oh. That was a delay. Christ. I'm seriously, I'm on the verge of bumping Pepperstone. I really am. Pepperstone. Robo Forex. Finding all sorts of trouble at the minute with them. So I'm going to start a short position there. I'm going to add to it down there. I'm going to monitor it as we push up, and I'm just going to keep getting in short basically until we get some traction to the downside, and then I'll add with a view to coming down for that gap fill at some point. Just try and get some of this loss back, but I'm just taking very wide stops on it. So stop out on this first position is pretty much ADR. And if we push up towards ADR today, I'll be watching for reversal alerts. I might monitor M1 on it. It's not actually much difference to M5, is it, at the minute? 132.41. 132.42, yes, it's pretty much the same place as M5. So I'm going to start a short position on this. On my IG charts, there's no gap showing. That's because you are trading a broker that shows aftermarket and pre-market data. So if you want to find out where the gap is, look at where the market closed yesterday. Yeah, and then look at 7 a.m. this morning, which is when Frankfurt Exchange opens. Then the trading floor opens at 8 a.m. So anything in between there and there is not it is tradable, but not tradable with the exchange, if you see what I mean. Futures. So you've got a cash market and a futures market. It's all slightly different, but you basically can't trade properly on the Frankfurt Exchange until it's open. It's like going shopping. If the shop's got the door shut, you can't get in. Same with the exchange. You can't trade the top 40 stocks in Germany when the exchange is shut. Same as you can't trade Forex at weekends. It's shut. The exchange opens at 7 a.m. So any data between there and there is pure broker data. And it's always the same. You'll get the same data across multiple brokers. And it is all tracked. I don't know exactly how it works, but there are proper exchange times. Same with the CME. Yeah. The CME, basically, you get Globex data. So this is all Globex data, which is their Globex electronic exchange platform, basically. So you can trade stocks 24/7 pretty much. But the New York Exchange opens at 1:30 UK time, or 1:30 in the US, basically. Sorry, 1:30 UK time, 9:30 in the US. That is when the proper floor opens, and that's when it all kicks off. That's when the traders start trading. So a lot of people ignore the Globex session, and let's say, for example, we opened here at 1:30, they would say there's a gap, and they would look for a gap fill, because what's traded on Globex is very, 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 very small in comparison to what's traded on the normal exchanges. You can see it by looking at the volume. If you look at the S&P, look at the volume when New York opens. Yeah. So that's London volume, and this is now New York opening. There. 15:30 my time, which is 1:30 UK time. It's really confusing, isn't it? I really wish there was an easy way of doing time in Forex, in trading in general. 3:30 UK time, broker time, is 1:30 UK time, which is 9:30 New York time, which is when the exchange opens. But if ever you want to know when an exchange is open, just look for the volume spike. That's when the exchange opens. Yeah, you can see that's where the volatility starts, and the candles all get much, much bigger. But for today, we've actually got quite a surprising amount of movement, considering we've got non-farm payroll. But yeah, that's Diamond actually has made an indicator that kind of draws the gap. If you've got that type of chart data where it actually puts all the pre-market data in there, it just draws where the gap actually is, which is quite handy if you've got that sort of data. But it's really easy. Just go to where the close line is, yeah, and you'll have a load of data that'll go like that. So 7 a.m, you just basically draw a horizontal line at 7 a.m, you draw a horizontal line at the close, that's your gap. Or if you want to see the gaps, go to TradingView and pick a broker for the DAX, for example, that doesn't have pre-market data. There'll be loads out there. Forex is one. I don't know if they're on TradingView. There's loads of brokers you can use on TradingView, isn't there? And just use that chart for that. I should use the Dixie, shouldn't I, on TradingView, really? Anyway. Right, that's all I've got for you today. I'm just managing this, which I've been managing all week because it's not doing anything. I'm not looking to get anything against ahead of non-farm. Oh, sorry, my emails. Not looking to get anything ahead of non-farm payroll. So yeah, just wait for non-farm payroll to kick in, and then next week I shall look to start some more positions when we've got a little bit more of a flat market. Very little happening next week, which is lovely, because we'll just be able to just see what normal price action is and what the market's actually going to do. Man, I can handle calculating lot sizes, pip point distances, pip value, trade values, and so on. But ask me to figure out times, forget it. Yeah, it's the same with everybody. The trouble is, because all brokers have got different bloody times. My E8 funded account, or all E8 accounts, but any account you do with them, it's different. Again, the times are different on that. And that switched, when our clock switched, the charts switched. And I'm sure they're going to switch back next week. So I have to adjust all my times and everything. It's just a pain in the backside. We should all just use one time. UTC 0. We should all just use that. Every broker should use it. Everything should be centralized, and we can then all just sing off the same hymn sheet. But it just doesn't happen. Yeah, as Diarmuid just said, he's got an indicator in the files section in Telegram, which shows the gaps for those with broker data. So if you want, that's in the file section. So yeah, good movements on the on everything this afternoon for non-farm, but obviously quite likely to be whippy. So really good for scalping, but obviously very dangerous for scalping too. So just be careful today. And when we've got non-farm out the way, we're clear sailing, so we can actually see what the hell the market wants to do. So I shall be taking positions next week. But at the moment, I'm just sort of waiting for stuff to pull back. If I ain't pulling back, I ain't getting in, basically. So, all right. So have a good one. Hopefully, non-farm payroll is good. I'll be in the Telegram group. I am going to trade it possibly, but not. I'm not going to live trade it. I'm possibly going to take a trade on it. Not going to straddle it. I'm going to, because I've got a feeling we're going to get a whipsaw today. But if we get a spike US dollar, I'll be looking to jump in on a retracement of the spike. That's the way I'm playing non-farm today. If it dumps as well, I might try to buy as we start to pull back with a stop under the low. So you can't see that, it's off the screen. So for example, pound US dollar. So this would be my strategy on non-farm today. And I will trade pound US dollar. So obviously what I'll be looking for will be it to tank, because I'm expecting strength on the US dollar. We know the pound is weak. So if we get the spike down on non-farm, as it pulls back, I'll be looking to take a short. If we spike up, I'll be looking to short it up there somewhere with a stop above the high. But I want to see it trickle down first and start that movement. Because non-farm is just a manipulation. It's got absolutely nothing to do, non-farm payroll, with fundamentals. It doesn't affect monetary policy. It's an after effect of what's happened with monetary policy. It's just a massive manipulation event from the banks. So that's all I'm looking to do with it. What do you trade on the NFP news? You can trade, there's two ways to trade non-farm. Any index, usually US index. But any index will go nuts on non-farm. Any US pair will go nuts too. The best pairs to trade for the US are the ones which are the weakest. So US is going to be the main manipulated currency. If you want to get the maximum movement out of non-farm, then you need to see what the weakest currency is at the moment. So at the minute, the weakest currency today is, at the moment, it's the US dollar. So the second weakest currency, assuming that that's going to be different, would be your yen. So potentially US dollar yen might be the best thing to trade, because yen is very weak, which means the US dollar will push it further. But obviously we know we've got a weak pound. So it all depends how you're going to trade non-farm. If you're looking to trade non-farm to get a move, that's fine, and just get out. You can trade pretty much anything. If you'd like to start a position on non-farm, sure, on the pound US, and then maybe wait for a pullback and scale in and maybe hold it for a day or into next week, probably you want to pick something we know is long-term fundamentally weak, like the pound. There's no right or wrong, though. Everything moves. You know, you look at CAD Swiss, that will move. Everything moves on non-farm. Everything. But your indices tend to get the most. I mean, when I'm trading futures, you can't trade futures on non-farm payroll because the liquidity jumps. The NASDAQ will jump literally 100 points in a second. You try and you can't get filled. It's impossible to trade it. And it's very similar on here. You can get slipped massively trying to news trade. What you need to do is, the best way to trade any news event is to get in ahead of the news. So if you want to trade non-farm payroll today, the best way to trade it, in my opinion, is to do, I'll tell you what we'll do. I'll do it. All right. Going short. Yeah. So this is how I would like to trade it. Sell stop under that low. Yeah. And then maybe a sell stop under that low. Because what I'm expecting is I know we've got a weak US pound, and I know we've got a strong, we should be getting a strong US dollar. So if this thing does this today, right, and gets down to here, for example, what I can do is I can break even, stop that position. Worst case scenario is I'm going to get broken out and I might get slipped a bit, broken even and might get slipped a bit. Best case scenario is I'm right, it flies down, gathers me up into 2 more positions and gets down to here, and I can get out with a massive profit. But what most people try to do with the news is they wait before the news, and what they do is they straddle it. And the dangers with straddling news is, first of all, the whipsaw, bang, you've just lost 2 positions. And secondly is the push, your entry here gets triggered here because there's slippage. And the market makers will always get filled first by the exchanges. So you don't get filled until up there. What it does is it moves up to there and then it comes flying back down again. So your stop loss here, which was 1% risk, is actually now 3% to 4% risk. So instead of getting stopped out at 1% because you got the trade wrong, you actually get stopped out at 4%. And then to worst case scenarios, they then trigger you short and then come back, take out your stop and come back to where they were. How many times do you see that happen on non-farm? That is a typical non-farm move. Take out the stops on the high, take out the stops on the low, come back to the middle, and then everybody's dead. Right, now let's go. Which is why I don't usually straddle trade, because it's just fatal. You can work a lot. And again, coming back to the gambling thing, it is pure gambling. Yeah, absolute pure gambling. If you put an order there and an order there ahead of non-farm payroll, you're gambling. It's pure gambling. You've got no idea which way it's going, neither have I. And the danger is that house wins. Occasionally on a non-farm, you'll get that. I'll tell you what we'll do. Let's look at the last non-farm. We'll see what happens. Where are we? October 7th. October 7th. Okay, so that's the last non-farm. There. Yeah, 3:30. Oh no, that's New York Open. Sorry. 7th of October. Did we not get anything then? 2nd of September. We didn't seem to get anything. But if that was the non-farm payroll move, basically, you can see what happened. It literally just gapped down ever so slightly. Let's look at it on M5. 7th of October. Yeah, so it's here. So we were there. So what a typical straddle trader will do is they will either straddle that and that, or they will straddle much tighter. You know, that's where we were. You'll straddle somewhere like that. Yeah. In this particular case, your short would have got triggered and you'd have had a lovely win on that one, which is great. A typical non-farm often looks like this. Yeah. Straddle trader that day got long, stop, taken out. Entered short, stop, taken out. Back to middle. That's a typical non-farm, which is why I was looking at that thinking, is that not non-farm? Because that looks exactly like non-farm to me. But that's what typical non-farm payroll will do. Yeah. So they will take out everybody. And then after that, then they will start their move. So the best trades to take are often fades of non-farm, which is why I was saying the best trade today, in my opinion, would be if they push up this afternoon, I would fade that because I'm expecting US dollar strength and I'm expecting pound weakness. So that would be the best fade. If it goes down to there, I would probably wait for it to come back into here and then short it. But, you know, each to their own. But for me, what I prefer to do is have a position on, and ideally in profit ahead of non-farm, so that I can not have any risk on it, or very, very small risk if I get slipped. We've seen it, haven't we, with that Swiss yen trade that I took, where I got slipped $500. I lost $500 on a $100 risk. I got slipped 4 times bigger than my risk. It happens. It just happens. So, you know, if this now trickles down to here today, I just put a stop on that. No risk. If it goes down, brilliant. I'll get gathered up into more positions and I make a load of money. I won't, because I'm trading 0.1s, but I'll leave this on. But the stop on this has got to be somewhere. So let's risk $4 on it. So if it goes up, I'm going to get stopped out. But, you know, it's entirely up to you how you want to trade news. But it's a very good way to make money. And this is what these guys are doing on the prop firms, yeah? There'll be people sitting there right now with funded accounts, new funded accounts, sitting there flat. And what they'll be doing is they will be trading this with 5% risk, which is your maximum daily allowance. And they will be going long or short. And they will either be lucky or they'll blow it. If they're lucky, they'll make 50K. If they're not lucky, they'll have to start again. But this is the mentality that these prop firms are starting. They're starting this gambling revolution with prop. And, you know, there's nothing wrong with it if you can make it work. If you take 10 prop accounts and it costs you 5,000 and you get 3 of them passed, and you take 1 long and 1 short on non-farm payroll, you're probably going to make money, aren't you? One of them will blow, the other one will make a fortune. Unless it does that, then you'll blow both of the accounts and you'll be back to square one and you'll be 5 grand down. Yeah, it's gambling, isn't it? That's what it is. But yeah, indices are great because indices move massively. But again, you get slipped. And the advantage of getting in early is I'm not going to get slipped. That's my price. I can't get slipped on it because I'm in. If I have an entry there, I could get slipped 30 points, couldn't I, or something? Can we predict with the US dollar and the yen? No, you can't predict anything. Amit, you're asking me to tell the future. There isn't anybody on this planet that can predict where anything is going at any point in time. Have you watched the Boocamp? I don't know if you've watched the Boocamp or not, but you'll know that there's 2 things that happen to price. It goes up and it goes down, and it moves through time. There isn't anybody on this planet that can tell you what is going to happen when. Nobody. Is there? Think about it. If I knew that, I would be a billionaire. I don't. Bill Gates would be, he is a billionaire. He was. I'm just trying to think of somebody rich that isn't a billionaire. They're all billionaires now, aren't they? But yeah, you can't do that. You can't do it. We'd all be millionaires if we knew which way it's going. You don't know which way it's going. Non-farm payroll is going to go one way or the other. It's totally down to the banks. They know where it's going. Well, they hope they do. Again, bring it back to what I said yesterday. There's 10 banks. That's the wrong word to use. 10 institutions that control this market, that have enough money to push this in one direction or the other by executing orders. If 5 of them want to do that and the other 5 want to do that on a non-farm payroll, it's going to go like that. And it's exactly the same as currencies. If one is weak and one is strong, you'll get movement. If 8 of these guys this afternoon, want to go long and 2 of them want to go short, it's going long. Unless this guy has got 8 times more money to put in than these guys have combined, in which case it's going short. Unless you have a contact in every bank on the market maker desk at the exact time non-farm payroll is released, no one on this planet knows which way this is going today. Just accept it. And if you want to try and make money on non-farm payroll by gambling, long or short, do it. There's nothing wrong with it. But don't ever expect anybody to tell you which way it's going. And if somebody does, they're just gambling. Signal providers. I get bombarded on all sorts of groups. I'm not in much of them anymore, but they're all like, join us for non-farm payroll. We've got a surefire signal that non-farm payroll is going long. Really? Who's told you that? No one ever get back to you and tell you who told it, because that's a bollocks, isn't it? No one knows which way it's going. But yeah, anyway. So it's best to wait after the news, Trev. Yeah. It's not best to wait after the news. Again, that non-farm payroll we just looked at. If you'd have been straddle trading on that non-farm, you'd have had a beautiful result that day. But go back and look at other non-farms, the other ones you wouldn't. So if you wait afterwards and you try and fade it after it's pulled back, they might go the other way, in which case you'll get stopped out. And this is it. This is what I'm saying. News trading is gambling. I've tried news trading. There's courses out there that teach you how to news trade, and all they do is they tell you to straddle it. And they tell you to look at historical data and do what I just did. Go back in the charts and look at what happened every time. And again, you look at this, right? If you were to go back and look at these, right? Last of them, they're all green. What does it say here? Actual greater than forecast, good for currency. That non-farm payroll we looked at on October the 7th, what did it do? That. Green. Greater. Good for currency. Should have gone up. Went down. Actually, we were looking at pounds US dollar, so that is actually right, isn't it, in this particular case? But going back and look at all these, you will find that it doesn't matter what colour that is, the market goes where the market goes. Why? Because the banks have got a book which is balanced long or short to make them money. Yeah, it's going to go the way they want because they're the ones that can move it. So let's say this position I've got on now, right? I'm short, aren't I? If I'm a bank and I'm short in profit and I've got the power to move this down to here and make more profit, what am I going to do? Oh, the news has come out really good. Excellent. I'll tell you what we'll do. We'll take it there, but we'll take it there after I've made my money. That's what the banks will do because they've got the power. There's no forecasting tool in the world apart from a coin that can tell you which way it's going, and you'll be right 50% of the time. Diamond, does the prop firm let you have two evaluations at the same time? Yes. Yeah. Yeah, I run multiple evaluations most of the time. I've usually got an evaluation on. Not always. But yeah, you can run multiples, yeah. Take as many as you want. Don't forget the prop firm's business model is not to have you as part of their firm trading for them. Their business model is for you to take evaluations. That's how they make their money. Again, going back to the 90% of people blow their accounts in 90 days. Yeah. If you saw the statistics from a prop firm and you saw the 98% of failed evaluations, you'd realize how much money they're making. I take 10 evaluations, I will fail 5 or 6 of them. And I know what I'm doing. Well, I think I know what I'm doing. I know what I'm doing, I think, more than the 95%. And I still fail them because I've got no control over the way the market works, when the market works. I take 10 bad trades on the trot, I lose. Same as everyone else. Look at my P&L. This is trading the DAX for the last 48 hours. My funded account, I made money yesterday. Yeah. On this account, I made a loss. I took the same trade. Look, I took the same trade on this account as I took on my funded account. My funded account, I closed it with $1,000 profit. This account, I took a loss because I held it longer. And the next candle came down and I couldn't get out of the position. So therefore it turned into a loss. It's that close. It is that close between making money and losing money in trading. I've just got gathered into a short on the DAX. But yeah, you can run multiple evaluations. If you've got multiple fundeds as well, obviously, and the way to do this, if you want to do, if you're worried about having multiple fundeds with the same account, get one funded account with EA, get one funded account with my Forex funds, and get one funded account with FTMA. right? Wait for non-farm payroll. Take one long, one short. Yeah, you're going to blow one. And I take, don't just take one long, one short. Take one long, one short with 4.5% risk or 5% risk, whatever your maximum risk is. One of those trades quite possibly will work, won't it? And I can guarantee you the one that works is going to more than pay for the blown account. More than pay for that. It's all a game. These props, they're all a game. And it's a good game if you know what you're doing with them. I should do a maths equation, shouldn't I, really? Like the one I put in the Telegram group where I worked out what I'd spent and what I'd made. I should do a proper video on it, really, to explain the way to actually make money out of prop trading. Because everyone's after it. Everyone wants 100,000 account. No one can hold 100,000 account. Because you're not used to trading 100,000. Impossible to readjust your mindset to 100k. It's very hard when you've been trading 1,000 or 5,000. Suddenly going up to 100k. Psychology is an absolute nightmare. In the current market, US dollar is not getting manipulated. Well, everything's getting manipulated every day, and that's why it moves. Market makers will be on the opposite side of retailers. Yeah, they always are. If you want to know which side to go to IG. If you want to know which way to go here. US 500. This tells you which way the market is positioned. So at the moment, the longs are exiting and everyone's starting to go short. So check this just before. Forget this. This is totally irrelevant. What you're interested in, I've covered this before many times in the past. But this angle here, go away, is what you're interested in. If it's doing that, it means that all retail is buying and they're exiting short positions. So what do you think happens? This chart shows you what happens. Look, you can see it. It's very, very clear. It's clear as day. Yeah. This means that everyone's buying. Look at what's happening to the actual price of the market. Yeah. This red line going up means everybody is selling. Everybody's going short. Yeah. Look what happens. Price goes up. Everyone goes, oh no, they exit their short positions. What happens? Price goes down. The market will always and has always done the opposite of what the retailer does. And it has to, because what does the market do? Reach for liquidity. Who puts liquidity in the market? Retail. So this chart just proves, if you want to call it the smart money concept, it proves that the market goes the opposite way to retail. So IG is the largest broker in the world. This is a graph of the net long and short positions of all of their traders, retail traders, on their books. If this thing is screaming to the upside, the market's going short. If this thing is screaming to the downside, the market's going long. Every market. Silver. Oh, let's not do silver because it's crap. Just trying to pick a proper market that's got proper movement. There we go. Prime example. Yeah. What is this? Pounds US dollar, right? What's everybody doing right now in the last 4 hours? Yeah. Since the 1st of November, everybody's been buying pound US dollar. What's happened to pound US dollar? The market's buying it. So what are the market makers doing? Constantly gobbling up your buy orders and stopping you out and stopping you out. And when you go, oh, this is definitely not, I got to go short, they'll bring it back up again because they want to gobble up your stops. That's what it does. Everybody exits their long positions. Yeah, it's just, I mean, you can see it. It's just, you can see it everywhere. Everybody's exiting their shorts. Everybody's going long. Market's coming down. Yeah, retail goes long, market goes short. Pound yen. FTSE. Yeah, everybody at the moment is selling the crap out the FTSE. FTSE's going up. Yeah. You know, but this is a hindsight chart. Absolutely no use to you as a trader what's happened in the past. What it shows you is 100% guaranteed that whatever button you press, it does the opposite. You don't know which way it's going to go, and you can't tell. But the way to use this chart is to focus here. This is updated every 4 hours. If this line is screaming up, it means everybody's going short, right? You need to be selling it. Sorry, you need to be buying it. If everybody in the world is going short, you got to be selling, buying. I keep getting it wrong. It's a hard thing to get in your head. That's why I keep getting it wrong, because to do the opposite of what the market is doing is totally unnatural, isn't it? Totally unnatural. But you see this chart, yeah? The sellers have been increasing. There's been more people going short on the FTSE, short on the FTSE, short on the FTSE. So what's the FTSE been doing? Going longer and longer and longer, because everyone's shorting it. Everyone's shorts, put stops in the market. So the market comes up and grabs those stops. Every time you then go short again, it comes up and grabs your stop. Every time you go short, it comes up and grabs your stop. Market goes up when the sellers enter. It's just the way it works. But non-farm payroll is irrelevant. It doesn't matter, does it? It doesn't matter whether you're long or short. They'll take the lot. They'll take everything. If you haven't seen this before, it's called dailyfx.com. It's IG Markets Sentiment Index. There's no way to make money out of it, so don't think you've suddenly found the Holy Grail. It doesn't work that way, but it just proves the point that they do the opposite. Yeah, a lot of people come on and they go, right, well, you know, it's bearish. Why is it bearish? And this is the way your IG tell you to use this. And don't forget, the people publishing this data are there for one reason and one reason only: to take your money. They're a broker, right? Their job is to make you trade. So more tools they give you, which potentially think that you've got an edge, the more times you're going to hit that button, the more commission they make. Yeah. So net shorts are more. So therefore, it's bearish. Yeah, on the DAX. What's the DAX doing this morning, everybody? Why? Because everybody's short. What are they doing? Taking everybody out. I am one of those statistics this morning, aren't I? Yeah. But at some point, everybody that's been shorting the crap out of this is going to go, either I give up, which means there'll be no more liquidity for the market to come and grab, or they're going to go, right, tell you what, we were wrong. I'm going long. Then the market's going to come down and grab your stops down here, because there's no more liquidity up there to grab, because we've stopped going short. We've stopped putting our stops there. If there's no target for them to grab money from, they'll come back the other way and get it. The IG Sentiment Index just shows you that playing out. Just shows you the opposites. The real way to use this is like this. Yeah, 90% of traders are long on silver. I haven't looked at silver, right? I never look at silver, do I? I haven't even got it in my market watch, but I can guarantee you if we go and look at silver now, that thing's coming down. Why? Because everyone's long. Let's look at it. I don't even have got it, have I? Probably have. Oh, I have got it. Is it XAG? Oh yeah, silver. Coming down. Markets. Oh, market's long. They're just gobbling up. Was it long or short? Might be proving myself wrong on this one, you know. Actually, silver. Net long. Where's it gone? Yeah, so everyone's net long. Look. So this is an anomaly, this one. Look, everyone's net long on it, and it's actually going up. That's interesting. I would imagine this is probably going to come crashing down very soon. because everyone's long. Where's all the money? Down here. Because everyone's got stops down there, so it's going to want to come and grab them, isn't it? That might be a way to use it. You never know. Anyway, but that's the IG sentiment index. So go and have a look at it if you want to. It's no use. You can spend hours. You can spend hours on it, and it won't get you anywhere. But historically, it's really interesting just to, it just shows you how wrong the market get it. And it's this whole thing of do the opposite to what everybody else is doing and you'll make money is kind of right, isn't it? Really, because we know that 90% of people lose money in the markets. They all publish that fact on all the broker websites. You just got to find a way to do the opposite of them. So you need to know what way they're positioned. But this shows you open interest at the moment, but it doesn't show you any data about how much. 38% of people, but the guys with the big accounts, they might not be in that 38%. They might be in the other bit. You just can't tell that. Yeah, I mean, silver is kind of ranging, isn't it, really? But anyway. Anywho, it's worth having a look at if you're interested. Market makers will be on opposite of the retailers. Or we'll sell into the retailers so they go long. Yeah. It's always the way with news, it's just one of those things, news. It's just a way to make money, basically. Look at FOMC. FOMC was a prime example, wasn't it? They took it long. Everyone went, woohoo! And then they took it short and everyone went, oh. And in this case, they did actually continue the move. But a lot of the time, they would just bring it back, won't they? So if you've gone short or long anywhere in that day, you were taken out. Doesn't matter which way you went. And if you went long on the breakout, you got taken out. If you went short on the breakout, you made it, which is what I did. I took that short, didn't I? So lucky, because it's gambling. DAX going to have another go at a double top on that as well. I'm just going to keep scaling into this short basically until we get a move started to come and get this gap fill done. And hopefully, and again, same thing, hopefully what we can get is DAX down here somewhere, me having a couple of positions on, with an opportunity to get a very quick, fast move to the downside, which will obviously make a load of money. Try and get a position on and get it to break even ahead of non-farm. But we haven't got long to go because it's at 12:30 and it's 10 o'clock. So there's only 2.5 hours until that happens. So. Right, I'll leave it there today, guys. As I say, I'm not going to get into anything new today. I will look next week at getting into some more positions and hopefully we'll get some movement on this Aussie New Zealand. That's my my only issue at the minute. So that's all I've got. We've got some nice bullish movements coming in so far today. So looking good. If we can get that yesterday's high taken out today, I think we've got a good chance of maybe starting this move and then hopefully be out of that one next week. All right, have a good day, everyone. I'll be in the Telegram group. We'll watch non-farm in the Telegram group together. Good luck if you're trading it. Hopefully you get a lucky one. Would be good. But if not, I'll be back Monday, 7:50, same time as usual. And we'll have a look at what we've got for the week. And I will get the EA set up to get some positions started. So, all right, have a good one. And I will see you Monday.